Welcome to our Monday morning 10x weekly crypto kickoff report. Obviously, we are in a very important time right now. Crypto is breaking very important levels. That's why it's important to really go through the slides, see what's happening. Today's report, everything we're going to cover here from market cap to volumes to open interest, funding rates, ETF flows, stable coins, technical sentiment, volatility, and what are actually derivatives traders really pricing in. There's of course more details in the written report, but lots of people have asked for the slides, the charts, and so it's probably better to go through both of those reports at the same time. If you have access, when you look at the last 2 weeks what we have published on November 3rd a very important kickoff report indicating that this was probably the week back then where it would be decided if this is going to be the bullish period or bearish period, and it's all about the ETF outflows. It's all about people unwinding positions, and this is exactly what we have written a week ago when Bitcoin rebounded based on the US government reopening, but again the capital outflows were stronger, and that's why we sold off. So the two very important reports, or especially the one that we wrote over the weekend, it's really these 6 important charts where Bitcoin has been broken down to various support levels. We are very close to another one, and we have outlined in our report where we think the market can go next. The other couple of interesting reports that we've published, they were all on the bearish side. As you can see here on the bottom right, it's really knowing when to bet big and knowing when to not bet at all. I think everybody needs to really make a very important decision here. And our view has been actually quite bearish. So even end of last month, we highlighted how notably Ethereum is really at the risk of breaking down. And we came from more than 3,600, 3,700, and we almost at 3,100 here. So it's a 20% move lower in just like 2 weeks. But as we're going to go through the slides here, there's actually more that the derivatives market is pricing in, and I think that's why it's going to be quite crucial, another crucial week basically. So when we look at the crypto market cap, we have lost around $1 trillion worth of crypto assets. Basically, we peaked out at 4.3 trillion US dollars. We have fallen down to 3.17 trillion, and of course, interestingly, that volumes are not picking up. If volumes are not picking up in the liquidation period, that means not a lot of people are actually liquidating, not a lot of people are selling. It's gradual selling, and that's why there's no cataclysmic event yet. I think that's why it's very important to really monitor the volume, see really where we are in these levels, and so far we have actually seen lower volumes in this line. Obviously, October 10th was a major pivotal, event. We wrote about it. We cautioned actually to be really long after this period. There were a few assets we sort of liked, but it's not really that we were broadly bullish. We didn't think this was an event where people should really leverage up. And as you can see here, just before the market crash, we peaked out in the open interest for Bitcoin, and since then we have repriced lower, and we have not able to rebound. So nobody's really putting on a lot of risk right now into year end, and that was exactly our view post this October 10th crash. But interestingly, it's the funding rate is not really going down. The funding rate is staying high, which means still a lot of traders are long here. They're not throwing in the towel. A lot of people are still believing into the Q4 Christmas rally, but it might actually be that we're going to see more unwinding because other parts of the market are liquidating now. This is precisely what we expected. We're seeing something very similarly in Ethereum, but here, of course, the open interest has declined more sharply on a percentage basis, so it's down more than 50%. At the same time, volumes are dropping off sharply, so we peaked out at 122 billion on the 24-hour volume measurement, and now we are only at 35 billion. Of course, these are the volumes over Sunday, so they're relatively low, but nobody really trades on Sunday, it seems, these days. But nevertheless, it shows there's a lack of interest right now, but still there is more and more unwinding in Ethereum especially, and that's why we have traded lower, and we are actually below the October 10th level. I think that's an important indication. And when we look at the open interest combined, I think it's quite visible that we have gone lower, we have peaked out, the momentum has been lost, and unless we see a reversal, it's very difficult to really project that the market will go up again. We have seen, of course, the $73 billion dollars of net exposure being, net long. More or less, and that has really declined. So there has been some unwinding, but the unwinding is actually not relatively large yet, and I think we can still see a lot more unwinding, unfortunately. The interesting aspect is really that also the Bitcoin dominance is not really, shooting to the moon here. You would have expect that if the market would remain bullish, that we would see a gradual shift from altcoins into Bitcoin. This would push the altcoin dominance up, but that's really not the case. We have just risen from 56.8% to 58.7%. So that's sort of like just 2% increase, which is not a lot. We came literally from like 65% from the top when people were really bullish Bitcoin, but of course then the Ethereum wave came during the summer, and I think it trapped in a lot of people. So that's why a lot of people are suffering. A lot of people have allocated out of Bitcoin into other assets. And I think what we're seeing now is actually more a move into stable coins and an unwinding of stable coins, basically an off ramp to some extent. Our altcoin model, which really looks at the Bitcoin dominance, the market cap, how they interact, and when it's time to be long altcoins and have a preference for Bitcoin. For more than 50 days now, Bitcoin has been the preference here, and that's despite the Bitcoin dominance is not really rising yet. So it's still not the time to rotate into altcoins, and we would of course be more on the cautious side here and not have any exposure right now at all. Of course, stablecoins have increased, massively this year. Tether started at $138 billion market cap, and it went all the way to currently 184 billion. But if you look very sharply there, the last couple of days we seem to be peaking out. There is not a lot of money coming into the market. That was also like our view really end of last month, that we're not going to see a lot of inflows coming now, which is quite interesting because it has been a line from the bottom left to the top right, but it's sort of like slowing down. And when we look at the impulse, our stablecoin minting impulse that we calculate, we have actually really seen a sharp drop off. We are sort of like negative near zero, so not a lot of money is coming into the market right now. And I think that's why we are sort of like struggling on all ends, really. Of course, a key indicator has been the Bitcoin ETF inflows, and as we can see here, they really topped out on October 10th. This is, of course, when a lot of people became worried. I think TradFi investors, institutional investors became worried that this is something bigger. The collapse that we saw, there was, of course, the start of the whole trade war issue again, where Trump threatened 100% tariffs on China. But since then, we have seen sort of like $4 billion in outflows. This is, of course, not a lot compared to where we came from, but November is certainly shaping up as a second worst month so far, except really the 3.5 billion that we saw around the tariffs wars. Nevertheless, Bitcoin is nearly oversold at with an RSI of 35 levels. However, even if the market is oversold, Bitcoin can go lower. We of course need a reversal here, and so far there is no reversal, in sight. We have to see, of course, how the market, evolves. But nevertheless, the market is close to oversold levels. So a rebound can happen, but we don't think a rebound is going to, last, too long. A similar oversold condition is happening in Ethereum. We also are at this sort of like near 35%, lower bottoming period. Historically, Bitcoin has tended to bottom, but we usually see actually another leg lower. So what we're seeing is a divergence between the RSI going slightly higher versus spot prices falling, and I think that can be at risk here as well, where the move lower might not be as sharp anymore, but it might still go lower from here. Of course, our own calculated greed and fear sentiment index that is faster than the other greed and fear index that that's only published once a week. Our indicator is published literally every day. But I think here the interesting aspect is not really the actual indicator in gray. It's more kind of like in purple, the moving average. And usually when this is at near the 10% lower level, that's usually has been a good level to buy. So we might be getting to a buy level within the next 1 to 4 weeks, we think here. But we have not seen a reversal yet, and the reversal is really key for this indicator to be valid. Then, of course, what we're seeing this morning is a very sharp increase in implied volatility. This indicates that traders are actually really worried about sort of like almost like a market crash. They certainly expect a sharper correction. A week ago, front month's implied volatility was only at 43%, and now we're at 50%. So there is a sharp really increase in the front end. So it's really like this month where people are buying put options to hedge themselves. They're really worried that we're going to shift notably lower here. This is notably also seen in Ethereum, if not even a lot stronger, because implied volatility went to 79%. This is, of course, near a record recently. But I think it also indicates there is a lot of put buying right now. This is something we have not seen for a while, because normally people have bought a lot of calls. People were still believing in the upside story. But here it's quite notable that really demand for puts is quite elevated, and people are expecting 10% correction in Ethereum from current levels for this week, and probably finish the month 5% lower. I mean, that's what traders pricing in, but we're going to go through the pricing in a second. And if you look how implied volatility has actually moved over the last couple of days, of course, there was this big event on October 10th. And then, of course, we sort of like traded around, we traded a little bit lower, but implied volatility has increased sharply again. So people have really become, very concerned from this sort of like 62, 63% level to almost like 80% for Ethereum now in a matter of a month, basically. So this is a really sharp repricing, and it indicates there's a huge demand for puts right now to protect long positions. And this is what we're seeing really in terms of positioning. So when we look at the last week, how much was really traded in terms of notional, it was really puts bought notably for Ethereum, where we're seeing strong really interest there, also strong demand for puts in Bitcoin, but also people are selling heavily calls on Bitcoin. So it's really it seems like people are selling calls on Bitcoin to buy puts on Ethereum. It's really that the view is that the market will not rally a lot from here. It's more that we probably be at best range bound, but I think people are really worried about the downside exposure for Ethereum right now, because there has been so much positioning by the Ethereum treasury companies and not a lot of buying since then, basically. And when we calculate, what are the potential ranges, what are traders pricing in for this week in purple, it's really people are expecting, or traders are positioned really based on, the option market, for example, expecting we maybe go to 98% on the upside. We can fall down to 89% on the downside. So we would break the important 93,000 level. And for next week, the range is really staying below 100,000, but we can also drop to 87,000. That's what traders are pricing in for Bitcoin. And for Ethereum, traders are pricing in that we're going to fall below 2,000 or towards 2,800 this week, and potentially lower to 2,700 next week. This is what I was saying. It's also what the implied option market is pricing in, how people are positioned. And on the maximum side, by the end of next week, the market could rally to 3,363. But I think the downside is more what people are positioned for, and therefore I think we might actually push lower a little bit. Again, like the very important report we published over the weekend is really these 6 charts that everybody should be monitoring. Where can we rebound? How deep can we fall? What are the levels to indicate where people should have gotten out? and we will publish a report about the Bitcoin cycle. Is the Bitcoin cycle still alive? The evidence might surprise you. We have some interesting data there. We're going to republish the report within the next couple of days, and hope you enjoyed. Any questions, please let us know. Please like the video. I think it always helps us. If you want to see more of those, please leave a comment. That'd be great. All right, have a great week ahead.